Good afternoon. Welcome to Options Center. It's Sunday, March 3rd, 2024. Welcome, everybody. Thanks for joining us. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. What we're going to go through today is I'm going to show you the count on the long term here in the SPX. We're going to switch over to SPY, and I'm going to give you an analysis that we haven't done in quite some time. So we have the Elliott wave analysis, I call it. We're going to go through the Elliott wave picture all the way down to the 65-minute time frame. We also have this Elliott wave, the Elliott oscillator here, that can give us hints on the wave fives of each move to show that a reversal is imminent. So we already seen all the divergences, the market breadth, everything saying that this move is over, but we need to look at a different perspective as well while we're waiting for this reversal. Okay, so and then after that, you stick around, we will also go through the traditional technical analysis just on the lower time frame and show you that the next target is imminent. It's really, really close. And so we have a very probable reversal coming up this week. All right, let's dive into it. We have SPX. Here is a monthly time frame, the maximum information that we have. And this is just give you a broad sense of what's happening. This is super cycle 1 going into 1930 down to 2. See that nice sharp move there. 3, 4 into a flat. That's 2000, 2008. And we have this wave 5. Now, do I think the wave 5 ends here and then everything falls on its face? It's possible. I'm not in that camp. I'm more in the camp of watching this wave 5 as another wave 1. So that means wave 5 will be an extension. And once this is over, this will be considered a wave 1. We have a pullback, some sort of, in my opinion, a zigzag. Wave 1 into 2 is typically a zigzag, but we could have a flat pattern as well. Usually is not complex. So what we'll be looking for is a wave 1, pullback for wave 2 in some form or fashion, and then continue a new bull market into wave 3 as an extension of the super cycle wave 5. Okay, so that's the big picture. Now we can start working on the analysis, breaking down. I'll spend a little bit more time on the rest of the charts as we go down to more detail. Here's the Elliott oscillator. We have this peak here in 2022 where we had that large correction, and now we're diverging from the new wave 5 here in the purple. So you see the divergence that's playing out there. That's an indication that this is a wave 4 top, and we're going into and losing momentum into wave 5. All right, so let's move down to the weekly time frame. Show you the count just a little bit more in depth on SPX, and then we'll go over to SPY on a different type of time analysis along with the counts as well. So in this wave 5 possible going into wave 1 that I was just talking about and larger, this is we're getting to the end of this move here, and we're looking for some sort of correction, perhaps an ABC, a zigzag, and then continue the bull market. That's a huge move. That's a devastating move. So it looks small in comparison to the big picture, but this, when and if this happens, that's going to be very bad for the economy. Things are not going to look good. It's going to be quite the recession. Okay, so we have our 1-2-1-2 setup. Wave 3, you have expanding triangle and a 4. Wave 3 again on the higher degree. We just had our correction, and we're finishing off with a expanding ending diagonal. All right, we'll look at that more in the daily time frame into wave 5. So that's a major top there. This, we're having this momentum, this blow off top, because, and it's taking all this time to happen because it's such a major top. All right, so wave 5, and then we'll be looking for a reversal. I have these set up here where it's possible we'll get a reaction. I don't think this will be the end all be all, but from the bottom of the Corona crash to wherever we get our reversal, this is the 50-60% retracement. So a lot of people will think that this will be a 1, 2 in itself, and you continue. Possible, but I think this is more probable. You have the bottom of this move. This is all the entire move up to the top. You'll have a 50-60% retracement here, and so we'll correct into this zone, likely towards the bottom to retrace the Corona crash, maybe a little more. But this is a volume node here. We do have a little bit of time today, so I can put on the volume profile. Add this onto our chart. And, this is a good time to change over to SPY because there's no volume on SPX. So you see we have this consolidation zone here. A lot of people think this is what we're looking at for a correction. You have this zone here that made that volume node there. So I do believe this correction can come all the way back down to this node. That's a huge buy zone at that point. And then there's some that say we're going to correct all the way to 2008 in 2000, all the way down to the major node here on the weekly time frame. Again, it's possible. Not looking in that direction yet, but we'll have to see day by day. All right, so let's remove the volume node. Okay, let's change this board over to the weekly analysis here, and this is going to look very busy at this point. I do have to erase all these. I'll fix this a little bit later. But what I want to focus on is, first of all, the move from the correction that we had from 2022 down here to October low. We have an extension at the 127.2. All right, sorry, this is so busy. I'm going to clear that up. I want to get this video out. 127.2. That's about the 515 area. So that's a target zone here for the 127% extension of this move. It's a very common target, and we'll show you on the lower time frames how we're using that as well. So from this move, our first target, and then if things really get crazy, you have the second target way up here at 560. So that would be on the weekly time frame. What would happen there? And the reason why I'm mentioning this, that's a far way up there, is because we have an alternate scenario where the economy still looks really good. The Fed is going to pause and keep pausing, and perhaps we don't get our Fed pivot. When we get the pivot, that's when we know that there's something happening underneath the hood and the economy is going to be going bad, and they start needing a cut, and we have a recession on docket. So there's an alternate plan that I'll show you again on the daily time frame. So I want to show you that the two extensions, we're coming right up on the first one, and we have a time frame as well. So you see, this is the extension. Let me highlight it. That's our extension we're coming right to. And now we have a time and price coming into play here. So we have the window is about March 12th through the 21st. So anywhere within that window, and you have the price action here. I think that 12, it's not next week, but into Monday. So that's a possible corrective zone where we can get our reversal. And then that's really what I wanted to show with this Elliott oscillator. this also gives us a clue because we made a new high here. There was a divergence. We burned through that divergence. So we have a new high here. So this kind of gives us the hint that, hey, maybe this isn't the end all point. Maybe we have our correction and we start going higher for the last leg where we would get a divergence here. All right. So this deep correction, ever since we had this low here, we've been in the green. Okay, it's very positive for the market. We have the correction here. We have this nice steep correction here, and we just made a little bit of, we came down to the 0 line, and that's when the correction was over. We head back up here. So with another correction here, I would expect in the alternate scenario that we stay in this green area and we bounce higher. As price goes higher, we're going to make a lower high here in the Elliott oscillator. So that's what that would look like. Now let's go down to the daily. On this daily time frame, let's do the alternate scenario, not the ending diagonal. Yes, the ending diagonal. Now again, this is very, very busy in here. I have to clean this all up, but I want to show you, first of all, that we have our A, B, C for wave 1. This is the alternate scenario. ABC for wave 2, ABC for wave 3, and then we get our correction, possibly down into this zone, retesting the highs. You have this whole area here where we can test the highs up here, or more, a little bit lower down here. Okay, so testing the highs around 473, all the way down to about just below 460. That would be our zone that we'd be looking for a correction. But I do want to see, if this is the ending diagonal that I'm talking about, I do want to see a correction that breaks wave 1. So this wave 4, I want it to correct underneath this wave 1. That would be very common in an ending diagonal, especially of this magnitude. So going in a little bit deeper, this wave 3, we get a top up here somewhere. We're looking at, first of all, looking at the oscillator, we had the divergence here, negative divergence. Then we had our sideways correction. You see the correction, it played out, the divergence played out, and now we're getting that second and higher time frame divergence. But also on this move, this last move here, from this high to this high, we're getting another divergence. So that should start playing out, and it should start playing out on the on this major divergence here. So that gives us a clue that, again, that something looks like it's about to happen. So we have a little bit of a cluster here. That's what I want to show you on this time frame. Let me hide this. So this is what I would do. I would start hiding all the individual. You have this 12. I'll call it this window here because it matches up with the weekly time frame with this March 12th. It's like it's Tuesday, not next Tuesday, but the Tuesday after. So you have this window here, and on the lower time frames, we'll be able to even refine this cluster a little bit more. But you notice you have all these extensions here on wave 5, the time ratios on March 5th, and then the 7th, and then right after the weekend on the 12th there. So that's our window. We're coming into that window next week with Powell and all sorts of information, ISM, things like that. So that's a good window to be wary that this move might have ended there. So a little bit cleaner board here. This is the expanded diagonal. I want to spend just a second on here. And this is the ending expanded diagonal this is our primary wave here that we end, our primary scenario here that we end at this point. We, just like either scenario, we get a correction and then we either get a bounce and head lower, or this is a low and we have one more leg up. So that would be the secondary. Now, we looked at this as, if you count this as wave 1 being here, wave 1, and then an ABC correction into wave 3 here, that would mean the top is right here, and you connect with the top here, and we're starting to get right above that. Okay, so what that says to me is that it's real simple. It's the correction. It's an A, B, C here for 1. We're just going to adjust this. And we can't keep adjusting it more and more. So I know that some people say, well, technical analysis, you just keep moving lines over. In a sense, that's true. But I described this in 2 different ways. I said wave 1 could be here or here. So now it seems more likely that wave 1 is here. And we line this up with the top of wave 3. And now we have our last and final target up here for wave 4, just underneath it, a little bit of room there. And on the lower time frame, I'll show you why that matches up so well. So we adjusted it already. We have it up here. We have a little bit of room to go. Perhaps on Monday we go up into that area, Monday or Tuesday, and get turned around Tuesday, and we start our correction. All right, so expanded ending diagonal, A, B, C into 1, ABC into 2, ABC into 3, ABC into 4. Now, wave 3 is larger than wave 1. Wave 4 is larger than wave 2. And so wave 5 has to be larger than wave 3. You see the momentum is gaining. The volatility is raising. So we have wave 4, 3-wave move. And now our final wave, a very, very volatile, it's just a rip your face off rally. This is a blow off top, all right? A, B, and we're looking at wave C ending here, and we'll look at it a little bit tighter on the 65-minute. And we have our corrective move here with a divergence into these new highs. So let's go down to the 65-minute. And the only reason why I had this 100% here is because wave 3, that's 100% from the bottom of wave 4. This move had to get above here for this to be expanding ending diagonal. So we broke up that. We have all the check marks of this. We just have to look for a reversal. We don't have that sign on. We don't have a sign of reversal on the daily time frame yet. Clearly, the candle is not a reversal type candle. So let's go down to the 65. We'll finish up this analysis here on the Elliott wave picture, and then we'll go over to the 65 there. So let's go Elliott wave on the hourly time frame. Again, we're going to look at this this cluster of stuff here. I cleaned this one up already. I didn't get to that daily time frame, obviously. So we have on this corrective move, this is the second leg, the C wave of that long move we had since the October low. So this is A. We have that corrective B that we spend a lot of time here sideways. Instead of retracing a price, we retraced in time. So, and now we're looking for this final leg up. 1, 2, 3, 4, and we're the 5 of 5 of C. All right, so let's dig in here just a little bit more. So you have the 1, 2, 3, wave 4, and into wave 5. You see that we have a on this last move, in my opinion, and this is a 1, 2, 3, 4, and we're in the last moves of 5. We have the wave 1 here. It looks like an ending diagonal where we have an A, B, A, B, C for 1. It doesn't matter. We have a here clearly a 1, 2, and we have a wave 3. We don't have any sort of correction here, so I believe we have a little correction going for wave 4. However deep it goes, maybe it crosses back over this, but if we take out the lows, this is all invalidated, and then I think our correction is actually begun. But you get a correction in here, and you have some targets to finish off next week sometime up here, and I'll show you those targets in just a second. And just so you know, these are the major pivots where these blue lines are. So those are the relationships where time begins, and we have our cluster right here. That's all March 5th. All three of those, four of those relationships. Here is the ones that match on the higher time frames as well. Both of these clusters work. So this is Tuesday next week. This is March 8th. So that's Friday going in over the weekend into Monday. All right, so that's our second cluster. So we're looking into these two clusters of time for something to happen. We could have our peak here. We could have our peak here. All right. So something to keep in mind where time and price, it depends where we are when this time comes into play. We'll see where price is at the time. So maybe we get our correction into Tuesday. We start correcting sideways, this or that, and then we start getting our top near Friday there with Powell speaking on Wednesday and Thursday. We'll see. We'll see what happens. Now, if you're curious, the ratios here, what are they? What makes the ratio? This low here, we have our low, wave 1, 2, 3, 4, and 5. Well, all these peaks are the major peaks on this time frame. So it's a peak here, trough, peak, trough, peak, and trough. So those are relationships. So you have a high, and this one that I highlighted right here, you have the low to high, and in this case, to high. All right, that would be the relationship. In this case right here, you have the high to high to high. If we're looking for a high right here. So that's what those relationships are. The market has symmetry, and that symmetry happens all the time. All the time. You can go low to low to low. You can go high to high to high. So that's what we're projecting out here, is that market symmetry. Now, getting a little bit into, well, you can take a peek at the Elliott oscillator. You have our peak right here on the wave 3. That's very typical, the wave 3 peak. And then we have the wave 5 that we're looking at with bearish divergence. That's what that's telling us. Wave 3 is always the peak, and then wave 5 gives us a lower high. Now, if we dig in even further, what are we looking at here? All right, so we have our last move. This is the move, our wave 1 into wave 2. We have, just a straight up wave 3. And now we're looking for some sort of correction into wave 4 and 5. So we have this one here, the 162% extension, is the top of wave 3, correcting into wave 4. There's the extension out to 162%. So again, we looked at that higher time frame on the weekly, where we corrected from the 2022 top to the October bottom, and then we had that extension that we're coming into. That would be the 127 on the higher time frame that we're looking at. We surpassed that already on this very low, on the 65 minute. This one, we're looking at that second target, which is a 162. So we're coming right into that if we did not touch it already. So that was one of our targets. And then the next target is wave 3. It's very typical for wave 5 to be an extension, a 62% extension of the full wave 3. So here's wave 3. We take the size of wave 3 and extend it from the bottom of wave 4, and we have 62% of wave 3 right at the 515. Right at that 515 area. So you'll see the significance of this when we go to the traditional technical analysis, and I'll show you exactly what we're looking at right now. So remember 515. Let's go to the 65-minute chart. All right, I'm going to back out of here even more. Okay, so we already made our adjustment on the expanded ending diagonal. This was the peak there, and it goes way back. Here is the top. So you see we have room to go. And now we have this wedge. I know there's a lot of information on here, but this is a lower time frame. So we have a lot to look at. So we're forming a wedge. We also have this last move here, which is in a channel. And so we could dig into this last move here just a little bit more. And notice we have right above us the top of the channel, also the smaller wedge that's in the gray. That's from the top here, coinciding with the top here, and in confluence with the top of the channel. And let's say we get a little correction here with time. That gives us some price about 5.15. You saw on the other, all the way up to about 5.17. Maybe we correct more in time, but you see the targets. You see my point. We're in confluence here from 5.15 to about 5.18. Even the option's expected move is at 5.19. All right, so maybe if something happens at the end of the week, maybe we correct even further than I thought to cross over wave one as an ending diagonal, and we have one last move. Either way, these are our targets. I think we complete this week, and then we have to start looking for some breaking of some lows. First low would be this 505. That's what I want to show you. That's what's really, really important. Our targets. This is our final. We don't have anything else to give above here. We'd really, really have to rework what's happening if we get above and stay above this line up top here in this channel and this wedge. All right, so these are our final targets. Once again, I think we're going to reverse off of here. I think that could be a major top, or we make a nice correction and have one more move to the upside. Either way, we're getting this correction, and I think it's going to be a nice move, nice swing to possibly these lows here. I want to break this high right here. This will be our target area around the 458, 460. This is a pivot from the all-time highs, the former all-time highs. That would be perfect to retest that pivot, because we'd cross over that wave one that I was talking about. And that would give us a bounce area and lower, or the wave four of an ending diagonal and one more move to the upside. And we'll continue to monitor and keep showing you. Every time we do this, I want to continue to show you our pathway. We're correcting either way. We're correcting in either bouncing or moving to a new high. Okay. So that's it, you guys. Thanks for joining us here at Options Center. Have a wonderful day. We will talk to you tomorrow.